Hey everyone, and welcome back to another technical video. In this video, I'm going to be breaking down a wonderful variation that kind of backpacks off of the free swing trading strategy video that I uploaded about a month ago. I will link that one in the description as well. A ton of value in there completely for free, but I'm just going to pretty much show you another variation. The one trade I just took on AUD JPY, I banked 4%. It was a 2R trade, but I risked 2%, so it was a 4% position. I took it on some challenge accounts as well as my personal. The challenges that I'm doing right now are going very, very well. I'm at about 8% on two of them, and then the other one is in profit, but a little bit lower than 8%, but it's doing very well. And then of course I took it on my personal. So some great trade examples, and then I'm going to show you a breakdown on GBP CAD with a beautiful example of the same kind of variation. And I have actually done a day trading video on this before, so if you want to go see my day trading stuff, you can. It's the exact same variation from the day trading videos, but because price is fractal, we're able to use it with swing trading as well. So I'm going to show you a drawing of what the entry model is, and then I will go on the live chart and show you the exact trade that I took. So I'll show you the variation that I'm talking about right now. So for longs or buying opportunities, we'll see some sort of demand like this, and then we will see a sweep of liquidity, a break of the highs, leaving behind an imbalance, and then we'll have some sort of inducement low. We'll come down, take this low out, and then we'll rally to the upside. But the key is this demand zone has to be left unmitigated. So what I mean by unmitigated is it cannot be tapped. So a lot of the time we'll see the market rally, it'll come and make a low above that demand zone and then take off, leaving it for another move. It's a more complex pullback, but you see it time and time again. And a lot of the time you will get a beautiful reaction out of here because of the liquidity that you are taking from this low. The exact same thing for shorts, right? So we'll have some sort of supply being created. We'll sweep the supply. We'll have that break of structure. We'll then have a break again, and then we will come up, take this high into the supply that wasn't mitigated. Again, keyword, it cannot be mitigated. Mitigated means it has not come into it, okay? So it's fresh, and it will use this area as liquidity just like the above model did as well. So now let's jump on to the chart, and I'm going to break it down from the very top all the way to why I took the trade, and you will see that. So I ended up recording this trade fully live for my community, but I'm not going to show you that obviously because that's for them. So anyways, I like to start on the weekly time frame. I've talked about this, how important it is for swing traders. You need, in my opinion, to focus on the weekly, the daily, and then you can use the 4 hour, the daily for your entry. But you need to be on the right side of the market. You have to be in the weekly direction, in my opinion, or else you're kind of going in blind. So you can see here, we're clearly trending bullish, right? You can see it. We're just clearly trending bullish all the way up. My prediction is we are going to stay bullish until we reach this liquidity pool up here to the left. I do think we will sweep that and then maybe see some sort of retracement, or we'll just end up mitigating this order block here and having a aggressive move to the downside because we do have a ton of liquidity. But one thing for sure is we are trending bullish. So when I have that directional bias, I'm only looking for longs, right? Because I'm a swing trader now. That's what I've talked about in the last couple of videos. And you can see this exact diagram, right? What diagram did I draw? We had some sort of demand. We had a sweep of liquidity. We had a break, right? We had a retracement. We had a break again, and then price came down, took the low, and then broke to the upside. Look, that's exactly what happened here, right? We have the demand over here. We swept liquidity to the left, caused a move up, came down, broke higher, rejected here, swept the liquidity again, and then we pushed to the upside. This exact same drawing is exactly what happened here. And a lot of the time, people would get stopped out here. And this is a valid trade. I just want to make this clear. If you were someone who was trading structure, if you were trading structure and you took a long here, this is a valid trade, but this is a trade you would have to manage risk accordingly because we have this unmitigated demand zone down here. Unmitigated demand zones will get tapped because there are orders there, especially when they cause the big move, right? So this could have been an opportunity that you would have, get taken out for break even, but that's totally okay. I sent this out to the group because I wanted to take longs from here. What I wanted to happen was I wanted us to break up like we did, breaking structure, and retrace into this area to push up. But when we didn't, and we only filled this imbalance and left these orders unmitigated over here, I wasn't interested in taking these longs because we had the area down here. So once the market started to reject from this area, I'm anticipating this low to get taken out. So I ended up setting a limit on this demand zone right here. If we look on the 4 hour time frame as well, we had very corrective pull back down into this region, right? So we had all of these highs up here, up here, up here that we were going to take out. Now, I had my full take profit at this high up here, but like I've talked about before, I have a rule that when I am up over 2%, so once I get up over 2% into this supply zone here, I ended up rolling my stop loss to 2%, which is really 4% because I'm risking 2% per trade. So yeah, if this trade goes the extra bit to the take profit, that's okay, but I was sticking to my plan 100%, and that's all you can do at the end of the day. I have no issue in banking, 2R or 4% because I risk 2% per trade on my swing trades, just because I take less per week and they're higher quality setup. So again, making sure you are using unmitigated areas of demand to look for an entry. And here's a perfect example right here. Notice this unmitigated demand right here. See this? Very unmitigated demand here. We came up, we filled this imbalance, we never mitigated this area, and then look what happened. The market comes, taps back into it, and then it pushes up, it rallies. So just looking out for these unmitigated areas is very, very important because it's going to give you an idea of where you think the market's going to go next, because those areas got to get tapped. Those areas have to get tapped. It's very, very important that they do. And you'll see time and time again that they do. So this was the beautiful, beautiful, beautiful trade, and I'm happy that I was able to participate in it. For a swing trade, I was only in the trade for 3 days. I got in it Friday, early Friday morning, overnight, and then I just got taken out of this trade today, April 23rd. So 3 days I was in this thing. So it's perfect, and it just shows that with swing trading, you can use the 4 hour, you can also use the daily time frame, and you're still going to catch some nice moves. Like, to take a daily time frame trade and be out of this thing and the amount of time that I was is awesome. And like I said earlier, if this trade does go all the way up to here, that's completely fine. I'm completely okay. It just means the analysis was perfect. What I've noticed with swing trades and my 2% rule is there's been times where I'll be above 2% and price will come into an extreme high like this and reject heavily, and I'll end up giving back a ton of profit. So because I'm already up over 2%, I'm totally okay with banking that and making sure that the market doesn't retrace against me and I lose a ton of profits that I was holding a trade for a couple days. You know what I mean? So now let's take a look at a beautiful example on GBP CAD with the exact same entry model that I showed you. So right away on the daily time frame here, you can see exactly what I'm talking about. This thing was beautiful. Unfortunately, it got swerved on this initial position, but I was already in another trade, so this wasn't something I was interested in taking, but some of our community members did. Unfortunately, they did get tapped at break even, but if you didn't go break even on this trade and you just kind of let it do its thing, you would have been completely fine. So if you guys remember the entry model at the beginning of the video, I was talking about how we would have some sort of supply, right, being created. We would sweep it, we'd have a break, we'd have a short-term high get created, and then we would come up, take that short-term high into that unmitigated demand zone and dump to the downside. Now, if I'm showing you this right here, you can see that's the exact same thing that played out over here, right? We have the supply zone over here. You can see we sweep it, we have a break to the downside, we create the short-term high. What do? We come up taking this short-term high here into this unmitigated area right here, and then it sells off. So let's take a look on the daily time frame because it's super clear on the daily. The 4 hours clear as well, but I just want to show you how much clearer it is on the daily. We sweep liquidity over here, we break, we have the supply zone that creates a break of structure, come up short-term high, breaks down again, and then this is an area where you could have just set a pending on this supply zone, stop loss just above the high, and you can target these lows down here. And you can see this was our target. I posted this in the Discord group as well for our community as a trade that I wanted to take over here, and this exact same thing played out once again. So it was very clear. A couple of our members ended up getting taken out for break even on this trade right in this area because it did retrace back up. But like I said, if you just kept it and you let it do its thing on the daily time frame, you would have been laughing in this setup. So those are two variations that are super, super common. If you combine these variations with the swing trading plan that I posted a couple months ago, you're going to have a lot of success in the market. If you're interested in joining our RM trading community where we share trade ideas, there's endless content, you have tons of help from myself and other community members. It's just overall an amazing place to learn and grow as traders. I mean, it's a complete family vibe. Make sure you check out the RM Trading link in the description of the video. If not, completely soak up all the free information we have here on YouTube and you will find a ton of success. So Only if you're interested in it. It's completely fine. It's for serious traders. And what do I say at the end of every single video? Let's be 1% better every single day. I appreciate you all, and I'll see you in the next one.